All right, everybody. How are you? Orlando here, and welcome to today's weekly market preview. And I'm going to talk about gold and the US dollar, Japanese yen, which is the two markets that I trade. And I'm going to start with gold. Now, I'm going to start with the four-hour chart on gold and the four-hour chart on the US dollar, Japanese yen. Then I'm going to go down in time frames to spot possible, executions at the open. Now, gold, this is a 4-hour chart. Now, interestingly, right, we have been quite bullish in gold since we liquidated this low. So I'm going to show you. I'm going to go to the data actually. Now, very bearish move from all-time highs down to 43.50 level. Now, this was, in fact, a 1,200 pip move to the downside. Then gold made all those losses back. And then again, it opened last week, I reckon, on Sunday, and completely erased all those losses. Now, if you look at the structure in this market, we are in quite the bearish structure after all-time highs. Now, why do I say that? Because we keep making lower highs and most importantly, lower lows. Now, is this the lower high for a continuation lower? I don't know. I couldn't tell you that. Nobody could. Nobody can. So let's go to a 4-hour chart again. And we see the actual ranges that we are trading in. It's quite interesting. So I have a few lines in my chart, and let's start the liquidation of those lows on March 20th. Yes, on March 20th, gold has been in a bullish structure, right? Higher highs and of course higher lows. So this means that we could in fact be looking for longs because we do want to trade with the trend in this case. Now, we have reached a very important pivotal zone. If you notice here, this is where buyers jumped in to push price in gold up by the end of the week. And then the weekly open, week open, and then we saw that move to the downside. But then again, this is a very key pivotal zone that gold rejected this week. Now, if we go to the 1-hour chart, just look at the immediate structure in this market. Now you can see that for the past few sessions, we have been stuck in a range. Now, there's not too much to say about this other than we are holding this key pivotal zone, which is the 4,700 level, the 4,700 level is a key support zone in gold. So I'm going to put a line here, right? Just at this key pivotal zone, sitting 4,700 level, which is the zone that I am working with. So the rate that I'm working with is the last or this week's highs at the 48, 58, for this probably 48.60 level, and those lows, the last lows that we printed at the 4,700 level. So we are in a 160 pip from 1600 pip, I'm sorry, 1600 pip range in gold. Now let's go to a 15-minute chart, which is quite huge. So we have these highs right here, which were Friday's New York session highs, and these lows. I'm going to show you actually. These highs right here, which are Friday's New York session highs, and these lows, which are Friday's New York session lows. So this is the immediate range I am working. Now I'm going to place my lines here at the highs and then at the lows. Now, why is this important for me? Well, if we go to a 5-minute chart right here, if you go to the 5-minute chart, even though we are in a range, right, gold closed very close to this session lows, to Friday's near session lows. So what I am expect, well, I don't expect anything at the open, right? could be volatile. We don't know if we're going to have a treatment Trump also, but whenever this happens, what I look for is a possible price failure from the session low for a continuation higher. Remember that we saw that even though we are in a range, and for the past sessions, the structure in this market is bullish in higher time frames. So um, momentum favors the long side, even though we are in an immediate range. So what I would want to see here, let me just zoom in for you guys. Let's see if this is better, much better. So what I would want to see is gold liquidating Friday's New York session lows, then creating a price failure from me for me to go long, targeting these immediate highs and overall New York Friday's New York session highs. So this is the game plan that I have in my mind, in my head. This is the only possible execution for the open. Right. So that means that we could see 180 pip move to these immediate highs and overall a 400 pip move towards New York session highs. Now, if and only if gold, let's go to a 50-minute chart to show you this. If gold opens very bearish and liquidates the Friday's New York session lows and then goes here to liquidate Friday's London session lows, then I would consider this a very bearish open and my long idea would be invalid. I would not be chasing those shorts at all because though that execution doesn't land within my rules or my entry model. But if we see price in gold open extremely bearish, I'm gonna zoom in again a little less, and comes here. Here are London session lows, Friday's low, London session low. Now, if gold opens bearish and we have a bearish candle here, a bearish 50-minute candle closing below the Friday's New York session lows, and then a new bearish candle, 15-minute bearish candle closing below Friday's London session lows, then I would in fact consider this a bearish market, which could be targeting these overall lows right here. Again, I wouldn't be chasing this. I don't trade breakouts, but bearing in mind that some of you do. These are the two possible scenarios that I see in gold for the open on Monday. That will be Sunday for me. Now, let's go to the US dollar Japanese yen. Daily chart of the US dollar Japanese yen, quite bullish. Again, after this massive bearish move that liquidated these lows, right, we saw price move up and then it closed very high towards the weekly highs. Now, that's important, right? Even though we are in a very tough consolidation to trade, this is very tough to trade. Remember, this is daily chart. I am going to show you what I'm looking for. Now, for our chart, same thing here. We have Friday's New York session lows here and Friday's New York session high here, I reckon. And this is the range that I'm working. And as you can see, US dollar Japanese yen closed very, very, very undecisive. What I mean by this is that unlike gold closing very low to Friday's New York session lows, the US dollar Japanese yen closed in the middle of the range. So I don't have a bias for the open in this case, but if we go lower in time frames, I'm going to show you what I would want to see. Now, let's go to the hourly chart. Again, as you can see, the past sessions have been very tough to trade in this market, even though we see a bullish move or bullish momentum, right? This is a very tough range to trade. Now, having said that, we have a key pivotal level here. My line here. Again, key pivotal levels are very important. Why? Because this is where the market shifted, right? So you can see we were bearish here. Then buyers jumped in at this level, broke with this key pivot level, and then it's starting to be support, right? Buyers jumping in here and jumping in here. Now, as you can see, buyers were unable to break higher, right? Yes, we buyers were able to push price up, but we didn't see any candle closure above this high, above this level. Now, this is clearly a rejection, right? Buyers were unable to push price up, and then we saw that massive move to the downside, liquidated this note. Then buyers jumped in, but as you can see, was a very choppy move to the upside. Now, yes, buyers are quite in control in the immediate transaction momentum. But there is a quite the struggle between buyers and sellers. Now, let me just zoom in. This is the hourly chart, and let me show you what I can see or what I see when I see a candlestick. This is from this low to this high. This portion in price action, which is Wednesday, New York session, was quite bullish. So all of those candles pushing price up, right? Very bullish price action. But then again, the move to the upside came with a lot of drawdown, right? A lot of drawdown, right? As you can see, sellers were quite eager to continue to push price down, touching this key pivot level. As you can see, were these candles. Then they were unable to follow through with that bearish momentum. Again, here, price touched this key pivotal zone and sellers tried to push price down, being unable to follow through. When I say being unable to follow through, I mean being unable to clearly break with the bullish structure, meaning a clear candle closure below the previous low, which would invalidate the bullish structure and shift it from a bullish structure, immediate bullish structure, to an immediate bearish structure. Again, here you can see massive rejection of the previous low. Sellers unable to follow through. So this tells me that momentum is on the bullish side of things. But because I don't have a level to work with, I wouldn't be executing any trades. That's me at the open. But on a 50-minute chart, where you can look for, and the range that I would be working with is this key pivotal level or those highs and this rejection of the lows. So this is the range that I'm going to be working with at the open, and these highs to these lows. Now, because price is close, very close to that key pivot level, and because we have seen in the past quite the selling aggression here at the highs or at this level. Remember, levels are not lines, they are actual levels in the market. So because we have seen clear selling aggression at this key pivot level twice in the past, even though sellers were unable to follow through with the momentum, right? Doesn't matter. We have seen that sellers are jumping in here. So what I would want to see here, what I would be, not eager to execute, but if it plays out or if it brings, I would definitely execute, is price opening bullish on Monday and creating a price failure from this level, even though a price failure would create a higher high, right? And with the higher lows creating or validating even further a bullish structure, a price failure, model is a model based on immediate momentum. So if buyers, and the idea is here, if buyers are strong enough to push price above my key pivot level, but then get smacked back down by sellers, this shows me that the immediate momentum, this is bullish and this is bearish. I'm going to use S for sellers. Actually, no, that doesn't look. But again, if buyers are strong enough at the open to push price up above my key pivot level, right, but then get smacked back down by sellers, right, creating what could look like a engulfing, bearish engulfing 15-minute candle, right, closing below this lows, the lows below the range. I would consider this an A plus price failure model, which means that immediate momentum is controlled by sellers and very, very likely with a high degree of certainty or the probabilities on my side, I would say that we could in fact look for a move towards the low of the range that I'm playing, which is this rejection low. That would mean that I could see a 30 pip, 35 pip move to the downside. Now, remember that price failures are just momentum plays, and we don't look for extreme reversals in the market. They're just momentum plays. And this would be what I would be looking for in my model. Now, if this doesn't print, right, which can be the case, and buyers are in complete control at the open, and we see a 50-minute candle close above my key pivot level and a follow through with a new 50-minute candle, we could definitely see buyers in control at the open. And the play that most likely would be optimal would be a buy on a retest offset level for a possible retest either of this highs, this projection candle, or this highs, which would mean that we could in fact look for a 60 pip range move to the upside if this plays out. So both scenarios are possible. The most likely scenario is the bullish one. That's why I will look for executions at the open on the US dollar Japanese yen on price failing that level. But this is what I'm looking for at the open of the two markets that I trade. So very interesting. This is very interesting, and the open is most definitely going to be interesting for us. So remember to trade safe, and don't be eager to jump in just because you see price pushing up. That doesn't mean that we have a clean break. Remember and wait for clear confirmation that this level is no longer filled with sellers and they are completely absorbed in the sense that all the sale orders have been taken out. So for that play or for that to be considered, we need a couple of 50-minute bullish candle closes above, showing strong bullish momentum. And don't chase the market either, right? Just try to wait for a clean pullback to possibly execute if that lands within your entry model. Now, the other side of things on the US dollar Japanese yen is that if price opens bearish, right, and continues to the downside, then I wouldn't execute. I wouldn't be interested at all in this market because very likely if we open with two 15-minute bearish candles, very likely we will go towards these lows on the immediate time, right? And after that, I am against trading the lows of the range or the highs of the range blindly. So if price push down towards this rejection low, I would be a buyer here. Most likely we will continue lower, but again, nobody can say that. But if this scenario plays out, the bearish open scenario, then there is no trades for me, right? I would only be interested in buying pressure, then buyers getting exhausted and getting smacked back down by sellers for possible shorts. And number two, buyers very strong at the open with follow through and then possibly a pullback for me to consider longs. So that is what I'm looking for in both markets that I trade at the open. Again, trade safe, and I'll see you guys very soon. Right? Cheers.